Yes, guys, so welcome back. So we were discussing about illustrations, and we will continue with our illustrations which are given in the standard. Guys, remember when we are discussing about the illustrations, be very clear that we are only applying what we have learned under IND AS 16. We are not learning anything new. It's the same paragraph that we have learned earlier under IND AS 16. We are trying to apply right now as a part of our illustrations. So these illustrations are only meant for a better understanding of the standard. Now, apart from this, we'll also have to look at our workbook, which is given to you in your module 3, and also additions to study material, which is given in your module 4. Now, that will bring us to the end of discussion on IND AS 16. There is also another module which is given to you, which is basically discussing about your compendium of solved illustrations, which is your module 6. So, compendium of solved illustrations has all the content other than the study material problems which have already been asked in the exam or have been reflected in your RTPs, where we try to even solve those problems as well. So let us continue with the illustrations first. See in this illustration 8, let's go to illustration number 9. An entity has acquired an asset 3 years ago at a cost of 5 million. The depreciation adopted for the asset is 10% on reducing balance method. At the end of year 3, entity estimates that the remaining useful life of the asset is 8 years and determines to adopt a straight line method of depreciation from the date so as to reflect the revised pattern of recovery of economic benefits. Show the necessary treatment as per IND AS 16. Guys, after the IND AS 16 has actually been introduced and after the revision of AS 10 in 2016, the change in method of depreciation is only considered as a change in estimate. It cannot be considered as a change in accounting policy. How are these two different? If you call it as a change in accounting estimate, then we will only have to give a prospective effect. If we considered this as a change in accounting policy, like we were doing prior to 2016, we would have given a retrospective effect. So here, absolutely, we are only giving a prospective effect. So prospective effect is supposed to be given for a change in method of depreciation from reducing balance method into a straight line method. But this happened at the end of year 3. So at the end of year 3, he is saying that the remaining useful life of the asset is another 8 years to run. Clear? Another 8 years to run. So based on which we have to calculate what is the amount. So let's see. 3 years as per reducing balance method, calculate. The value of the asset is 5 million. Illustration 9. Start with the first one. What is the original cost of asset? The first acquisition cost of the asset. $5 million is nothing but 50 lakh. Right? Moving into the second part. What is the depreciation? What is the rate at which you are depreciating the asset? Look back at your question. Your question says your method of reducing balance method applies a depreciation rate of 10%. So 10% on the reducing balance method is what we have to consider. Depreciation at the rate of 10% per annum. Under reducing balance method. Now this method is applicable up to year 3. So therefore, for year 1, year 2 and year 3 depreciations calculate. First, at the rate of 10%, first year would be 5 lakhs. Second year, try to reduce 10% from that 5 lakhs. It is directly reduction of 10% from 5 lakhs. Otherwise, the other way of doing it is 50 lakhs minus 5 lakhs, 45 lakhs into 10%. Still give you the same answer. So directly reduce 10% from 5 lakhs, 4 lakh 50. Again reduce 10% from 4 lakh 50, 4 lakh 5,000. This is the depreciation for 3 years. Now find out what is the reducing balance of the asset after you depreciated it for 3 years. Tax 9. The answer that we get, that is a WDV on the date when you have changed the depreciation policy, depreciation method, WDV of asset on the date of change in depreciation method. Until then, he was following reducing balance. Subsequently, he is adopting a straight line method. So, what is the value of the asset? The written down value of the asset is 36,45,000. Now, I'll have to adopt a straight line method after this. Now, to apply a straight line method, I should know what is the estimated useful life or estimated remaining useful life. And what is your estimated residual value? No residual value given in the question. So I'll ignore residual value and I'll only calculate what is the depreciation henceforth. Depreciation from year 4 per annum. Look at the question and find out what is the useful life in the question given to us. The question says, at the end of year 3, the entity estimates that the remaining useful life of the asset is 8 years and he shall adopt and he determines to adopt a straight line method from that date to reflect the revised pattern of recovery of economic benefits. So 8 years is the further useful life. So make sure that you are adopting a straight line method for 8 years. $4,55,025 is the amount of depreciation, I guess. Just check. 36,45,000 divided by 8. Yes, it is 4,55,625 is the amount of depreciation to be charged henceforth after the year 4. Look back at the question. What did they say? So change in method of depreciation reflects a change in accounting estimate. So the depreciation shall be charged as follows and it should be dealt as per IND AS 8. First year depreciation is 5 lakhs. Second year depreciation is 4 lakh 50. Third year depreciation is 4 lakh 5. Until there it is absolutely right. But he is getting a year 4 to year 11 depreciation of 4 lakh 56. Just check guys if our answer is wrong. Minus lakhs is 4 lakh 50,000 minus 4 lakh 5,000. 3,64,000 divided by 8 years. Yes, your answer is 4,55,625. He has written it as 4,56,000. Guys, the answer might have been different. I think 375 is the difference that you're getting, but you can take it as 4,55,625. Your answer is absolutely right. There's no doubt about your answer. Your answer is absolutely right. Probably he might have gone with the rounding off of the error there. Frankly speaking, there is no error to be rounded off. Answer is 455,625. Look at illustration 10 then. MS has acquired a heavy machinery at a cost of 1 crore with no breakdown of major components. The estimated useful life is 10 years. At the end of 6th year, one of the major components, the turbine, requires a replacement as further maintenance is uneconomical. The remainder of the machine is perfect and it is expected to last for another 4 years. 6 years is out. So next 4 years it will still run. So there is no change in useful life. The cost of the new turbine is 45 lakhs. Can you find out, can the cost of the new turbine be recognized as an asset? If so, what is the treatment to be used? Guys, here you have to be very careful because did he identify separate major components or this turbine as a separate component? Absolutely no. He did not recognize the replaced component as a separate component at the time of original recognition of the asset. Now, at least now, when he has actually replaced the asset with 45 lakhs, did he tell you in the question what was the original cost of the replaced component? He did not. So what will we have to do? We have already solved a similar question. With the help of this 45 lakhs which is spent towards the end of the 6th year, we need to identify what is the original cost of this particular component at the time when you acquired the asset. How do you get that? 45,000 is at year 6. What is year 0 value? Year 0 value we can calculate by 45,000 into present value factors of any percentage comma 6 years. Now, what is the percentage that I have to apply? We have no idea. But the question has taken 5% as the reasonable basis. If you remember, even in the previous question also, where he has specifically given the discount rate, he has specifically said that the discount rate is 5%. Here, without even giving explicitly in the question, he has considered as 5%. Now, you might ask me a question, how do I know whether it is 5% or 10%? In such case, it is purely an assumption. In such case where the rate of discounting is not given to you, it is purely an assumption. So I will leave the choice to you. If you want to continue to take it at 5%, take it. If you don't want to continue to take it as 5%, then you can take any other percentage also. But please make sure that you're writing the assumption. Clear? So let's start solving this question then. This is my illustration number 10. Let's start solving. One assumption that we have to make, write the assumption at the beginning. Assuming the discount rate at 5% per annum. You want to take any other rate, please take it because the question did not mention. You are free to use whatever discount rate you want. I want to match my answer with the answer which is given under study material. So I'm making sure that I'm taking the same 5% rate. So let's look at it. What is the cost of replacement? The cost of the replaced component should be capitalized to the cost of the asset. In this case, the cost of replacement is 45 lakhs. The turbine, which was acquired at a cost of 45 lakhs. Estimated cost of replaced component in the original cost of asset. Original cost of the asset was 1 crore. In that 1 crore, what is the cost of this turbine? How do I calculate? Use present value factors. So 45 lakhs is at the end of year 6. Multiplied with present value factor of 5% for 6 years. Use your calculator. 1 divided by 1.05. 6 years. 4, 5, 6. It is 7462. 0.7462 into 45 lakhs. The answer of the replaced component .7462 into 45 lakhs, 33,57,900 is the estimated cost of the replaced component in the original cost of the asset. Now guys, this got replaced only at the end of year 6. Until then there was a depreciation which was charged. But see, estimated useful life. Since I did not consider this turbine as a separate component, I'll have to take the estimated useful life similar to the asset, and based on which you calculate what is your depreciation charge per annum. There is no residual value also given to us. Useful life is 10 years. No residual value to this. So the amount of depreciation charged is 3,35,790. Based on these numbers, try to identify what is the WDV on the date of replacement. WDV of replaced component on date of replacement on the date of replacement. What is the value of this asset? Very simple. $33,57,900 minus depreciation of 3,35,790 for 6 years. If I depreciate, the balance amount is 13,43,160. This is the cost of WDV of replaced component on the date of its replacement. Therefore, what is your accounting treatment? Recognition. My recognition should go like this. First, charge it off to P&L. My recognition part A, would be 13,43,160 should be charged to P&L. Should be charged to P&L. What should be capitalized to the cost of the asset? The cost of replacement should be capitalized to the cost of the asset, which is nothing but 45 lakhs. Be 45 lakhs should be capitalized to the cost of the asset. After this treatment, what should be the WDV of the asset? After you give this specific treatment to subsequent cost, what should be the WDV of the asset? WDV of asset after replacement. Once you have replaced the asset or replaced a component of the asset, obviously because you are charging a certain amount to the P&L, you are capitalizing another amount to the cost of the asset. Obviously there is a change in the WDV of the asset. So let's see what is the WDV of the asset. Original cost of asset. The original value of the asset is 1 crore. What is its useful life? $10 years. Based on which calculated what is its depreciation per annum? After you calculate depreciation per annum, try to identify what is the WDV on the date of replacement. WDV at the end of year 6, that is the date of replacement. Before all this happens, what was the WDV of the asset? What is your original cost of the asset? 1 crore, correct? What was its useful life? 10 years. That means what is the depreciation per annum? The per annum depreciation is 10 lakhs. Like that you have depreciated for 6 years, 60 lakhs. So what is the remaining WDV? 40 lakhs. Out of this 40 lakhs, which is the WDV at the end of year 6, I am charging a certain amount to P&L and I am capitalizing a certain amount to the cost of the asset. Less WDV of replaced component charged to P&L. Replaced component charged to P&L. Number 2, add. What do you add? Cost of replacement, which is capitalized to the cost of the asset. Finally, after these adjustments, I should be deriving WDV of asset after replacement. We will calculate the depreciation also after replacement, guys, but first fill it up till here. What is the WDV of replaced component which should be reduced from the WDV of the asset and charged to P&L? We have already calculated. Go up above and check. What is the amount? 13,43,160. This amount is 13,43,160. What is the amount eligible to be capitalized to the cost of the asset? The cost of replacement, which is 45 lakhs. Calculate now. The value of the asset after the replacement is done is 71,56,840. Now this is the revised WDV of the asset after you have replaced the component of the asset. Now, what is its remaining useful life? Very clearly he told you that the remaining useful life of the asset is 4 years. So, based on which we can calculate what is the depreciation per annum. Calculate. Remaining useful life is 4 years. Oh. 17,89,210. That is the revised depreciation per annum to be charged starting from year 7 to year 10. This is only for 4 years from year 7 to year 10. So your 10 lakhs of original depreciation has increased to 17,89,210 because of the replacement of a turbine which had at a cost of 45 lakhs. So we tried to calculate what is the original cost of the asset by applying discount factors. So look at what we have done. We started with saying that the cost of replacement is 45 lakhs. If at the end of year 6, if we are incurring 45 lakhs to replace the turbine, then what was the original cost of turbine which we would have actually included in the cost of the asset? So that 45 lakhs is after year 6. Then what was the value at the beginning of year 0? So I applied discount factors at 5% for 6 years, and based on which I identified what is the original estimated cost of the replaced component. It was 33,57,900. Here and there approximations are fine. Useful life was 10 years because there is no separate useful life for the asset. For the component, I am using the same useful life that I applied for the total asset. So 10 years, depreciation is 3,35,790. If 3,35,790 was depreciated for 6 years, what is the remaining WDV of the replaced component? The balance value of the asset is 13,43,160. This 13,43,160, which is the WDV of the replaced component, has to be charged off to P&L, and 45 lakhs that we have incurred for the cost of replacement should be capitalized to the cost of the asset. The WDV of the asset after the replacement should be identified like this. First, find out what is the WDV of the asset on the date of replacement. You have been depreciating the asset over 10 years and the original cost of the asset is 1 crore. Therefore, the depreciation expected to be charged every year is 10 lakhs. Therefore, the WDV at the end of year 6 is 40 lakhs. From this 40 lakhs, reduce the amount that you are charging off to P&L and capitalize the cost of replacement. That will give us a revised WDV after the replacement, that is 71,56,840. 6 years are done, another 4 years are left. Therefore, the depreciation is 17,89,210. Clear? So this is our concept as far as our replacement is concerned, and this happens to be one of the very, very important questions which has already been tested as far as your exam is concerned. Clear? Yes guys, 33,57,900. Luckily he has taken the exact same number of decimals that we have done as well. 13,43,160 is the WDV which has been charged off to P&L. Yes, and then 45 lakhs is capitalized to the cost of the asset. Absolutely correct. So the revised carrying value is 71,56,840. Is that the same answer that we have got? Yes, it was the same answer that we have got. Is the same answer that we have got. So he did not charge the depreciation. We calculated the depreciation as well. So our answer is a little more comprehensive than his. Look at question number 11 then. On April 1st, 2021, X acquired the machinery on the following terms. List price of the machine is 80 lakhs. This price is nothing but the MRP kind of a thing. Okay, that is the price at which the machine was quoted. Additionally, I had to pay an import duty of 5 lakhs, a delivery fees of 1 lakh, electrical installation for the equipment was 10 lakhs, pre-production testing was 4 lakhs, and purchase of a 5-year maintenance contract with the vendor was 7 lakhs. In addition to the above information, XYZ was granted a trade discount of 10% on the initial list price and a settlement discount of 5% if the machine was received, if the payment for the machine was received within 1 month from the date of purchase. XYZ paid for the plant on 20th April itself. That means he was eligible to receive that 5% settlement discount. At what cost should the asset be recognized? Guys, if you observe, there are two types of discounts that are given in the question. The first discount is trade discount on the initial list price, and the second one is the settlement discount if you have paid the money for the machine within 30 days. But however, you need to understand the discount which is allowed to us on the date of settlement, which is a settlement discount, is called as a cash discount. It shall not be included or excluded from the price of the asset. Such kind of settlement discounts shall be directly credited to the P&L as cash discounts. However, trade discount should be adjusted from the cost of the asset. How much is your trade discount? 10% of the list price. What is your list price? 80 lakhs. From 80 lakhs, 10% discount is basically 72 lakhs. Correct? 8 lakhs of discount. The balance of the asset is 72 lakhs. What about import duty? Should I include this import duty into the cost of the asset or no? Answer is yes. The answer would have been no, or any taxes thereon will be excluded only if the entity is eligible to claim any input tax credit or any refundable taxes have been charged. Import duty, nowhere is said that there is an input tax credit on that. So straightforward to 72 lakhs, you can add the 5 lakhs of import duty. Considering that they are non-refundable taxes, it is very important for you to write that statement that import duty has been included, as we have considered the import duty as a non-refundable tax. Delivery fee, should I add? Yes, because when we were talking about inclusions in the cost of the asset, we said all costs incurred to bring the asset to its current location. Cost incurred to bring it to the current location is your delivery fee. So 1 lakh also should be included. What about your electrical installations? Now, all costs incurred to bring the asset to its current location and condition in which the enterprise or the management is expected or intended to use the asset. Without the electrical installation, the asset may not be available for use. Therefore, such electrical installation also should be included to the cost of the asset. So add another 10. Pre-production testing. Testing, as far as it is successful, has to be included in the cost of the asset, because without testing, you don't know whether the outcome from the asset is as intended by the management or not. So therefore, testing becomes a very important inclusion even in the cost of the asset. So add another 4. What about the purchase of a 5-year maintenance contract? Guys, this purchase of 5 years maintenance contract is a pure repair and maintenance work. This pure repair and maintenance work, it is not necessary to bring the asset to its current condition in which the management intends to use it. Even if this maintenance contract was not acquired, the asset was still available for its intended use. Therefore, this 7 lakhs is not supposed to be included into the cost of the asset. But since you already paid for it as a 5 years maintenance contract, it should be considered as a prepaid expenses. Prepaid maintenance contract of 7 lakhs. Every year, you charge exactly 7 lakhs divided by 5 to your P&L, such a way that over 5 years, the entire 7 lakhs of prepaid expenses will be amortized to the P&L. Clear? So therefore, what is the cost of the asset now? 92 lakhs is the cost of the asset. 80 lakhs minus 10%, 72 lakhs plus 5% import duty, assuming that these taxes are non-refundable. Add delivery fees, add electrical installation, add prepaid testing. But however, this 5 years maintenance contract is not supposed to be included. It should be considered only as a prepaid expense. Cash discount, if received, will be directly credited to P&L. It should not be adjusting to the cost of the asset. Look at it. The answer is 92 lakhs. Absolutely right. Absolutely right. Discount received 5% of 72 lakhs will be transferred as other income to your P&L. So our answer is absolutely right, guys. We haven't made any mistake in this answer. At your illustration 12 then. I haven't written anything for the previous one, guys, because I think it was self-explanatory. I didn't have to actually write anything again. So if you want to write it, you can write it, guys. No problem. Look at illustration number 12. The term of an operating lease allows a tenant XYZ Limited to tailor the property to meet its specific needs by building an additional internal wall, but on a condition that the tenant returns the property at the end of the lease in its original state. This will entail a dismantling cost of an internal wall. XYZ incurs a cost of 25 lakhs for building the wall, and the present value of estimated cost to dismantle the wall is 10 lakhs. At what value should the lease improvements be capitalized into the books of XYZ? Guys, if you remember, we did discuss about this. The present value of estimated cost of dismantling, removal, site restoration should be included in the original cost of the asset. So here the cost of the asset, I incurred 25 lakhs, but I am expected to incur further cost for dismantling, which when discounted to present value is 10 lakhs. So how much amount will I capitalize? I will capitalize 25 lakhs plus 10 lakhs. The total amount of 35 lakhs is eligible to be capitalized to the cost of the asset. Clear? Guys, in this, what should be the useful life of the wall? What do you think should be the useful life of the wall for which the tenant XYZ can depreciate the wall? You cannot take a useful life of the wall beyond the lease term. Because even if the wall has a useful life or economic life beyond the lease term, since the wall is only meant to be used throughout the lease term, and after which you are dismantling the asset, then it should be only limited to the maximum of the useful life, which is your lease term. Here, X Limited started construction of a building for its own use. Self-constructed asset, following cost is incurred. Purchase price of the land. Remember, land should always be considered as a separate asset, cannot be clubbed along with the cost of the building, because land is a non-depreciable asset. We specifically learnt about this statement, so don't make the mistake of adding the purchase price of land into the cost of the building. Clear? Your purchase price of the land is 30 lakhs and your stamp duty is 2 lakhs. Guys, registration of the land will require some stamp duty to be paid. So that is 2 lakhs. So the total of 32 lakhs is the total cost capitalized to the cost of land. That is cost of land. It is not a depreciable asset and cannot be included into your cost of building. Building, start looking at it. Architect fee, yes, included. Site preparation, yes, included. Material, included. Labor, included. General overheads, not included. General overheads cannot be included because there is a specific exclusion from the cost to be included for a self-constructed asset. General overheads or administration overheads are excluded from the cost of the asset. Other relevant information that he has given. So based on this, we have to find out what is the cost of the asset. Materials costing 1 lakh have been spoiled, therefore have been wasted. Wasted material cannot be included into the cost of the asset. Wasted material should be charged off to P&L, just like the testing which has gone wrong. Further 1,50,000 was spent on account of faulty design work. Faulty design work, but it is not wasted. So since it is only correction of what we have done, you can very much include it. As a result of these problems, the work on the building was stopped for 2 weeks during November 2010, and it is estimated that 22,000 rupees of labor costs relate to that period. Building was completed on 1st January 2011 and brought into use on 1st April. X has taken a loan of 40 lakhs on 1st April 2020 for the construction of the building, which meets the definition of qualifying asset as per Ind AS 23. Loan carries an interest rate of 8% and is repayable on 1st April 2022. Calculate the cost of building, which shall be included in the tangible non-current asset as an addition. Guys, in this question, he is using a particular paragraph of Ind AS 23, which requires the borrowing cost to be capitalized to the cost of the asset. Guys, since we haven't discussed Ind AS 23, I'll put it straight into your head. Whatever you have learned as per your earlier AS 16 is applicable even here. If it is a qualifying asset, then the borrowing cost incurred on the asset until the asset is ready for its intended use can be added or capitalized to the cost of the asset. To that extent, it is sufficient. When we come to Ind AS 23, we'll explain and we'll understand in a much more detailed way. Clear? So let's start looking at this. Illustration 13. My objective is to again, guys. My objective is to determine determination of cost eligible to be capitalized to building cost eligible to be capitalized to the building. So let's start. In rupee terms is your amounts. Start first with cost of land and the stamp duty. And legal fees. These two amounts are not eligible to be capitalized to the cost of the building. These two amounts are capitalized to the cost of land separately. You don't include it in the value of building at all, because building being a depreciable asset while land being a non-depreciable asset, it is not suggested to be included into the cost of building. What is supposed to be included? Let's start. Let's look at what are the costs there, guys. First one, architect fee of 2 lakhs. Yes, eligible to be included into the cost of the asset. No doubt about it. Architect fee to be included into the cost of the building is 2 lakhs. Next inclusion. What is the next inclusion that we have? Site preparation of 50,000. Should it included? Yes, should be included. There's no doubt about it. Site preparation, 50,000 rupees included to the cost of the asset. No doubt regarding this inclusion as well. Now I'll take up my materials where I have adjustments. What is the cost of material given in the question? Material cost given in the question is 10 lakhs. But down below he said 1 lakh worth of material is spoiled and therefore it is wasted. Therefore it is wasted. So you need not include that. So out of your 10 lakhs, I'll reduce 1 lakh. $10 lakhs minus a lakh of wasted material. Or this is only 9 lakhs. Next one, labor. Calculate the labor work. Labor is given to me as 4 lakhs. However, down below he said, as a result of faulty work, the work on the building was stopped for 2 weeks. And it is estimated that 22,000 of labor cost relates to this particular period. So out of 4 lakh, this 22,000 is not eligible to be capitalized. So reduce it. So reduce it, guys. 4 lakhs minus 22,000. 3,78,000. Apart from labor, what else is there? General overheads not supposed to be included into the cost of the asset, so leave it aside. But now we'll have to look at what is the amount eligible to be capitalized. Now, amount eligible to be capitalized shall include the amount of borrowing cost. Look at the borrowing cost given in the question. X Limited has taken a loan of 40 lakhs on 1st April on construction of the building. Guys, the construction was completed on 1st Jan. So your cessation of capitalization should be considered as 1st Jan itself. And the construction of building satisfies the borrowing cost qualifying asset definition. Loan carries a rate of interest at 8%. It is repayable in April, but I'll only capitalize it till Jan because that is the date on which the asset is available for intended use. So total how many months? April to Jan. So up to 1st Jan, it's approximately 9 months. 8% interest on 40 lakhs is eligible to be capitalized. My one note got shut off. Just a second. Yes, guys, so we are talking about concept of borrowing cost eligible to be capitalized. As per IND AS 23, amount is 40 lakhs multiplied by 8% is the rate of interest for approximately 9 months. Calculate. I've taken a loan of 40 lakhs. I'm taking it at 8%. I'm only eligible to be capitalizing it for 9 months. So therefore, the amount eligible to be capitalized is rupee 2 lakh 40. Total it. What is the amount eligible to be capitalized totally? 2 lakhs plus 50,000, 2 lakh 50, 11 lakh 50, 14 lakh 50, 15 lakh 28, 17 lakh 68. Yes, guys. So look at it. Guys, we haven't used this 1 lakh 50, right? Therefore, look at that. Material costing 1 lakh was spoiled and therefore wasted. Further 1 lakh 50 were spent on account of faulty design work. Doesn't look like to be excluded, guys. Okay. He added up even purchase price of land also, which is wrong. That is what we have learned in the standard. So stamp duty is also supposed to be capitalized to the cost of the land. Architect fee is eligible to be capitalized. Site work of 50,000, site preparation of 50,000 should be included. Material he reduced even that 1 lakh 50 as well. He only reduced 1 lakh, but he reduced 1 lakh 50 as well. That is repair work which is supposed to be done. But as such, that is not necessary to be reduced, guys. You can take that. Over labor cost, absolutely correct, 3 lakh 78. General overhead should not be considered. Cost eligible to be capitalized towards borrowing cost is 2 lakh 40. Perfect, your answer is right except for the material of 1 lakh 50. His answer is wrong to the extent of land and stamp duty. Guys, to the extent of the material, guys, if you believe that even that 1 lakh 50 is not supposed to be included, then I leave you with the judgment. You can reduce it if you want. You can definitely reduce it if you want. So obviously your answer will be 1 lakh 50,000 short. So instead of 17 lakh 68, you might probably land up with about 16 lakh 18,000. Clear? Illustration number 14. XYZ purchased an asset on 1st Jan for 1 lakh. The asset had an estimated useful life of 10 years and the residual value of nil. Company charged depreciation using a straight line method at 10,000 per annum. On 1st January 2014, the management of XYZ reviews the estimated useful life and decides that the asset will probably have a useful life of further 4 years to run. Guys, when did you start using the asset? 1st Jan 2010, correct? It had an estimated useful life of 10 years. That means you are expecting this asset to be used until 2020 with a residual value of nil. So therefore, you were depreciating the asset by 10,000 every year. But after on 1st January 2014, that is exactly after 4 years, where you already depreciated 40,000 and the written down value of the asset today was 60,000, the management is revising the estimates and is saying that the estimated useful life is only further 4 years, not further 6, but it is only reduced to 4. So this 60,000 should be depreciated over the further useful life. This is only a change in the useful life, which should be considered as a change in accounting estimate. It should only be given a prospective effect. So therefore, over 4 years, when I revise the amount of depreciation to be charged, it is 60,000 written down value at the after year 4 divided by 4 years. So 60,000 by 4, the amount of depreciation to be charged for the remaining years is 15,000. Yes guys, so let's look at the last illustration related to your IND AS 16 given in your study materials. So this is your module 1 which I am referring to. The question talks about, on 1st April, Sun Limited purchased some land for 10 million. It includes a legal cost of 1 million, which is supposed to be included to the cost of the asset because that gives you a legal right or a title over the land. So the entire 10 million or 1 crore is supposed to be included and capitalized as a separate asset as land, which is not depreciable. In order to construct a new factory, construction work commenced on 1st May. Sun Limited incurred the following costs in relation to the construction. Preparation and leveling of land, absolutely supposed to be included, 3 lakhs. Purchase of material for construction is 6.08 million, so 6,08,000 in total. Employment cost of construction worker is 2 lakh rupee per month, that is 2 lakh per month. We have to multiply it with the number of months to identify what is the entire employment cost or the labor cost. Overhead cost incurred directly for the construction of work is 1 lakh per month, which is also supposed to be included. These are overheads. These are not admin overheads. They are directly attributable to the construction of the factory. Something like probably the water supply, the electricity which is supplied there. So these are certain costs which can be considered as direct overheads. Ongoing overhead cost allocated to the construction project using the company's normal overhead allocation model is 50,000 rupees per month. Guys, these are ongoing overheads. That means they are general overheads and they have to be excluded from the cost of construction. So this 50,000 rupees per month is not supposed to be included into the cost of the asset. Income received from temporary use of factory premises as car park during the construction period. Guys, this income received has to be credited to P&L and has nothing to do with your cost of construction. Cost of relocating the employees to a new factory is 3 lakh. Cost of relocating of factory should be excluded. We have already discussed this under self-constructed asset. Cost of the opening ceremony 1,50,000 is a pure cost of marketing. So therefore it is not supposed to be included in the cost of the asset. The factory was complete on 30th November and the production began on 1st February 2012. So guys, it was completed on 30th November. If you look at when did he start on 1st May? May, June, July, August, September, October, November. So about 6 months exactly has to be considered. Should I consider November as well? Yes, I should consider November as well because it happened on 30th of November. So therefore it should be considered as 7 months and not as 6 months. The production began on 1st Feb. Right guys, that is the date on which it was actually put to use. So I'm not bothered about that actual put to use basis. The overall useful life of the factory building is 40 years from the date of completion. However, it is estimated that the roof will require to be replaced at the end of 20th year from the date of completion, and the cost of replacing the roof on current prices would be 30% of the total cost of the building. Guys, 30% of the total cost of building belongs to the roof, which is supposed to be reconstructed after 20 years. At the end of 40 years, Sun Limited is legally enforceable obligation to demolish the factory and restore the factory to its site to its original condition. The directors has estimated that the cost of dismantling after 40 years based on the prices prevailing will be 20 million. That is nothing but 2 crores. An annual risk adjusted discount factor is 8% and the present value factor of 40 years at 8% is 4.6 cents. I'll calculate guys, but as I think it is 0.46. It is 0.46 I think. Next one. Yeah, I think it is 4.6 cents. It's nothing but 0.46%. The construction of the factory was partly financed by a loan of 17.5 million taken on 1st of April 2011. The loan had a rate of interest of 6% and during the period from 1st April to 31st August, when the loan proceeds were fully utilized to finance only the construction. Sun Limited invested has received an investment income of 1 lakh on temporary investment proceeds. Guys, there are some temporary investment proceeds of 1 lakh which he received. According to your AS 16 or Ind AS 23, this investment proceeds should be reduced from the borrowing cost. Required to calculate what is the cost of amount of factory to be presented in the balance sheet on 31st of March 2012. You are required to explain the treatment as well. Guys, purchase of land of 10 million has to be recorded separately. It is a separate cost or a separate asset which should not be depreciated. It is a non-depreciable asset. Keeping that aside, let's start looking at the cost to be included in the cost of factory premises. In the cost of factory premises, the first property is preparation of land leveling. Look at the cost. Preparation of land leveling supposed to be included in the cost of the asset. Material also supposed to be included. Okay, let us solve. I think it is better we solve it. So, as far as the first part is concerned, land it shall be recognized as a separate asset. Only the building should be considered. Factory premises is a separate asset. Let's look at the inclusions in the factory premises. First one is your materials. Look at the material supposed to be included in the cost of the asset. Oh, sorry. First is leveling of land of 3 lakhs. That should be the first one. That should be the first one, guys. Land leveling. Three lakhs. Number 2, material. Material cost to be included into the cost of the premises is how much? 6.08 million. 6.08 million is nothing but 60 lakh 8,000. $6.08 60 lakh 80,000. Next one, part 3. What is the third cost? It is obviously the labor. Labor cost to be included into the cost of the asset. Check. It is 2 lakh rupee per month. When did you commence the construction? 1st May. When did it stop, or when was it complete in all respects? Very down below he gave 30th November. So exactly 7 months. So 2 lakhs into 7 months is about 14 lakhs. Moving on. 4th one. overhead cost, which is directly attributable to the construction of factory, is 1 lakh rupee per month. So 7 months is 7 lakhs. Direct overheads, 7 lakhs to be capitalized to the cost of the asset. But the immediate next point is regarding general overheads, which should not be capitalized, which is given to us as 50,000 rupees per month, but they should not be included. General overheads are specifically excluded from the cost of asset. What is after your general overheads? Cost of relocation, not supposed to be included. Opening ceremony, not supposed to be included. Cost of relocation and also your cost of opening ceremony. Both these costs are not supposed to be included into the cost of the asset. I'm just writing it as nil after your general overheads and cost of relocation. Next inclusion. That's it. So from there on, you look at it. The factory was completed on 30th November. That it means it took 7 months, and the production began on 1st Feb. The overall useful life of the factory building was estimated to be 40 years from the date of completion. However, it is estimated that the roof will have to be replaced after the date of completion, and the date of replacing the roof at current prices is 30% of the total cost of building. After you calculate total cost of building, 30% is to be allocated towards the roof, and this 30% has to be depreciated only for 20 years. The balance 70% can be depreciated for 40 years. At the end of 40 years, the Sun Limited is legally enforceable obligation to demolish the factory premises and the site to the original condition. The director estimates that the cost of demolition in 40 years based on the current prevailing prices is 20 million. And an annual risk adjusted rate is 8%. So 20 million into 8% is the value that you have to consider. So for 40 years, you have to discount it, calculate and check. Dismantling cost. $0.46 into 20 million. How much is it? 20 million is nothing but 2 crores into 0.46 is 92 lakhs. Moving on from there, what else is given to us? The construction of factory was partly financed out of a loan of 17.5 million taken on 1st April. The loan had an annual rate of interest of 6%, and during the period from 1st April to 31st August, when the loan proceeds have been fully utilized for the process of construction. Sun Limited, however, has received 1 lakh as temporary investment from loan proceeds. So basically, he is trying to talk us about the borrowing cost eligible to be capitalized. Guys, you will have a better understanding of this concept after we complete IND AS 23. Borrowing cost eligible to be capitalized. 17.5 million into 6%. Borrowing cost eligible to be capitalized. You need to calculate, guys, and also make sure that you're reducing your proceeds from your short-term investments of the loan. Calculate. Use your head and use your calculator, and please make sure that you get the figure. What is the amount? It is 17.5 million and the loan was taken on 1st April. The loan has an annual rate of 6% and during the period from 1st April to 31st August, when the loan proceeds have been fully utilized for the financing the construction. So starting from 1st April, the entire proceeds have been fully utilized for the process of construction. And when did the construction complete? By the end of November. So April to November is the period. So that is for 8 months. How much is the amount? 17.5 million. 17.5 million is nothing but 1 crore 75 lakhs. What is the rate? 6%. So annual rate of interest is 10 lakh 50,000 multiplied by 8 by 12. Is nothing but 7 lakhs. However, 1 lakh is temporary investment that you got. Investment income has to be reduced. $1,75,175 or 1 crore 75 lakhs into 6% into 8 by 12 minus 1 lakh being the amount of temporary investment which I got, which should be reduced, and this amount will only be this amount shall be 6 lakhs. That's it. Calculate the total and get the answer. Nothing else. Land leveling of 3 lakhs plus 60 lakh 80,000 towards material plus 14 lakhs towards labor plus 7 lakhs towards direct production overheads attributable to the cost of construction plus 92 lakhs towards dismantling cost plus 6 lakhs towards total is supposed to be capitalized 1 crore 82 lakh 80,000. Check your answers. Check your answer. Check your answer. Please make sure that you're checking your answer. Is my calculation correct? Let's look at the answer, guys, given in the question. Look at it. Purchase price of land, you have to treat it as a separate asset. Your cost of leveling, 300. Guys, he's giving it in 1000, so it should be 3 lakhs. 3 lakh is your first answer. Absolutely correct. Check your answers, what you've written. 6080 in 1000 is 60 lakh 80,000, which is absolutely right. 1400 is nothing but 14 lakhs, correct, for labor. Direct overhead 700, which is nothing but 7 lakhs, absolutely correct. Finance, yeah, overheads allocated is 0, correct. Income from use of car is, car park should be credited to P&L, not supposed to be recognized here. Relocation cost not considered. Opening ceremony not considered. Finance cost is 700, which is nothing but 7 lakhs. Look at it. Put it as 6 lakhs, guys. Is it 7 lakhs? Or 75 lakhs into 6% into 5. That is 7 lakhs. It is 6 lakhs minus, yeah, okay, I'm sorry. So it is 6 lakhs minus 100. He has written it separately. So it is 6 lakh is correct. Demolition expenses is 920 in thousands, which is nothing but 9 lakh 20,000. 92 lakhs, huh? I think this is where we are making a mistake, guys. It is 9 lakh 20,000. Just look at it. He has written it as 20 million. 20 million is nothing but 2 crores into 0.46, which is 8% over 40 years. I think everyone, oh, I'm sorry, it is 0.046. Huh? I'm sorry. It's 0.046, it seems. My bad. My mistake. Then nothing but you are supposed to exclude 10. That's it. This is 9 lakh 20,000. Now you calculate again. Find out what is the cost. Obviously, cost will change. Answer is exactly 1 crore. Answer is exactly 1 crore. We made a mistake in computation of the dismantling cost. Someone in the comment section has actually put it correct. It is 0.046 and not 0.46. My mistake, guys. I apologize for that. So building is 1 crore. Now out of this building, I will divide it into 2 parts because there is a component of, out of this 1 crore which I got, I am pulling it out into 2 parts. Why am I pulling it out into 2 parts? Very simple logic. Because the roof only has a useful life of 20 years. Roof and all other components. I don't have to separate the other components because all other components will have a useful life of 40 years. 30% is roof. What is 30% of 1 crore? 30 lakhs. This 30 lakhs will have a useful life of 20 years. Since it has a useful life of 20 years, then my depreciation is equal to 1,50,000 rupee per annum. Okay. But when I'm talking about all other components, the value of all other components put together is 70 lakhs and it has a useful life of 40 years. Only your roof is 20 years. All other components related to the shed are 40 years. Therefore, my depreciation supposed to be considered per annum is equal to, divide and check, 70 divided by 4. $1,75,000. So what is the total depreciation to be charged on the entire building or factory building? Both put together, the annual depreciation would be about 3,25,000 rupee per annum which will be charged over every year into the P&L. Clear? So let's look at the solution. I think they were right and we were wrong as far as the computation is concerned, because they have got their calculation of demolition cost absolutely right. Yes, 30% into 1 by 20 is what depreciation should be considered. But now he is also asking you what should be the carrying value of the factory premises as on 31st March 2012. Can you tell me what is the factory premises carrying value on 31st March? When did you stop the entire capitalization? 30th November. From 30th November to 31st March, how many months? 4 months. Calculate depreciation for 4 months and calculate. Factory premises I've divided into two parts, roof and other components. Cost, when we divided it, this was 30 lakhs for roof and it was 70 lakh for other components. Now, current year depreciation in the current year of 2011-12, depreciation up to 31st of March 2021. This is nothing but 4 months. Calculate. Use your computation. First case, 1,50,000 per annum roof. 1,50,000 per annum into 4 by 12. Same way, 1,75,000 for other components per annum, also to be depreciated by 4 months. So divided by 3. This answer is nothing but 50,000. Other components depreciation is how much? Divided by 3. 75 divided by 3. 58,33,333. I'm sorry, thousands, right? 58,333. So what is the WDV on that date? WDV on 31st March 2021, 29,50,000 and 69,41,667. If you want, you can find out the total and put it into your total value of the asset. Absolutely fine. Okay. That is your answer even given here. So absolutely no problem. And that will bring us to the end of discussion on illustrations given under your study material. Clear? If you want to take down, please take down. Somewhere if you have missed the calculation, please take it down. I think until 1 crore everyone is fine. From there, if you want to take down, please take down. So that will bring us to the end of illustrations, guys.